All right, good morning, everyone, and welcome to today's webinar. My name is Danielle Bass. I am the Community Relations Manager at the Better Business Bureau, and I'm going to be your host today. Before we begin, I'd like to remind everyone to please stay muted and that this presentation is being recorded. Any questions can be sent in the chat or saved till the end, and you can unmute and ask them. I want to thank everyone for taking the time this morning to join us today, especially our guest speaker, Michael Wish. He has been a licensed insurance agent since 1975 and has not slowed down since. He opened Michael Wish Insurance in 1982. He has a true passion for insurance, which I have learned just through speaking with him and helping people along with it. He's a proud member of the Better Business Bureau, and we are super excited to hear him chat today. So, Michael, I will open the floor to start you off.
Great, thanks, Danielle. Okay, so our webinar today will talk about what's going to take from a business perspective as far as looking at disability insurance, long-term care insurance, and life insurance. I handle all types of insurance, auto, homeowners, and so forth, but we're not going to talk about the standard homeowners and auto today, unless it relates to disability, life insurance, and long-term care. As far as what it takes, you need to qualify for coverage, and I'm going to explain different aspects of what it takes to qualify for coverage. So, as Daniel mentioned, my agency, I started in 1982, concentrating primarily in these three lines of insurance. And in the early 2000s, I expanded to include business insurance for liability, auto, and homeowners, and other lines of commercial property and casualty insurance. But as I mentioned before, we're going to concentrate on these three lines of disability, long-term care, and life insurance. So the first main thing that we have to look at is someone's health. And everyone says, how much does it cost to buy a disability policy or life insurance policy or long-term care policy? In order to get to that step, we have to ask ourselves, okay, where do we stand physically as far as our health is concerned? What does our lifestyle look like? Whether it doesn't really make that much difference if you're single or married, or you own a business or you don't own a business. But from a business perspective, it is different as far as how you pay for it. All right. So, but health is so super important. So if you have a serious set of health issues, such as cancer, history of cancer, heart problems, severe diabetes, and maybe some other, long-term chronic medical issues, it may be difficult or impossible to qualify for these three lines of insurance. But hopefully that's not the case here. So good health is really, really important. And as soon as you can obtain one of these three quality plans, you're on your way for a better financial life. And because it helps you with everything else you want to do. All right. So my goal and my focus is to be here for you to make sure that your needs are taken care of. And I personally get involved with every client in my agency. I don't pass it on to anybody else to do the work. Okay. And so I'm always accessible. It's easy to talk to me. Email, telephone calls, personal visits. I'm there for you. Okay? So a lot of people say, well, good health. Okay, I can get group disability insurance. I can get group life insurance. So what are you talking about with health? Well, we're not going to talk about group per se, even though that's a factor in obtaining business disability, long-term care, and life insurance. But group coverage has its limits. And I'll be happy to take your questions as far as how that works to an individual plan, which is a lot different. So individual personal disability insurance is based on your income. It's based on your health, as I mentioned, and it's also based on what you do for a living. So someone who's a plumber, electrician, has the same access to quality coverage as, let's say, an attorney or a doctor or an accountant. The rates are going to be different. Maybe the coverage will look different, but the basics are still pretty much the same. And I've had many, many people who have very successful careers in the trades who have bought a huge amount of disability, long-term care, life insurance, and it protected their financial security. So once you get beyond personal disability income, which can dovetail with group if you have it and you want to supplement it, then you have business overhead. Business overhead disability insurance coverage is designed to cover your personal expenses that you're responsible for running your business. That includes salaries for your employees, which is number one, the rent or mortgage you pay on the office, or the mortgage you pay to the bank for if you own an office building, depreciation, professional fees, utilities, and so forth. So anything that you would normally claim as a business expense, it can be covered by a business overhead disability plan. And all disability plans, whether it's covering your personal income or your business income, have a waiting period. So you have to ask yourself, how long can I wait before the insurance company starts paying me during my disability? Can I wait a month? Can I wait 2 months? Can I wait 3 months? These are factors that are taken into play. And sometimes, based on your health, the insurance company might say, look, we'll offer you coverage, but you may have to wait a certain length of time before we're going to start paying you benefits. Right? So that's super important. You don't want to be in the situation of using up your personal savings or business assets and borrowing money unnecessarily from a bank and try to repay it at a high interest rate. The interest rates will eat you up financially, and disability insurance is really there at a very, very low cost, much lower than loans. Even if you pay many, many years of premiums and don't use the coverage, it's still a lot lower cost than trying to borrow money. All right, so you work together to have a personal disability income plan, business overhead expense disability. Those two working together, really a solid base for your financial security for running a business. Whether you're a sole proprietor, you have a partnership, you're part of a corporation, even if you're not an owner, let's say you're a key person in that corporation, well, that owner may want to protect you to protect the owner for your income as much as their business expenses. So there's a lot that goes on behind the scenes. And I work with individuals and businesses to make sure that everyone's on the same page. So I just want to also add that business overhead expense, unlike disability insurance, personal disability income insurance, is not part of a group plan. It's always purchased individually. It's part just on your own. Okay? So a lot of people say, well, again, Mike, how much something like this costs? I don't know how much money and I'm just starting out. Well, again, you can qualify even if if your income is expected to rise over the years, let's say in your 20s or 30s, but you know your income is going to go up in the next 5, 10, 15 years. A lot of insurance companies will offer you what we call starter plans. They will start at a very reasonable amount of premium for a high coverage, and you can expand on it as your income goes up. They'll automatically give you the options to buy more coverage as time goes on. So don't overlook the entry-level starter plans that are available to you. Okay, so you have to ask yourself, what's going to be my strategy going forward? What am I going to be able to do? All right. Again, I work with you to make sure that the coverage is affordable, it's understandable, and it meets your needs and your goals. It's not going to overwhelm you cost-wise, coverage-wise, and something you're going to say, geez, what did I do that for 10, 15 years down the road? It's something that many of my clients have kept. If you look at my hair, you'll see I'm not 20 or 30 years old anymore. When I first started, all my clients were much older than me. And they all told me 20 years in, we don't need this coverage anymore, but we're going to keep paying it because it's so reasonable in cost, and some other reasons as well. But they kept the coverage until they retired. So the cycle of obtaining disability insurance when you're young is super important. You don't want to depend on your business to start paying your business expenses, all right, in case of disability. The short answer is the Internal Revenue Service takes a very, very dim view of you having a certifiable disability and using business income or business assets, especially if you continue to pay yourself during a certified disability. So you don't want to get into that situation going forward. Okay, you don't want to get into a situation if you have company stock, if you're a corporation, start selling the stock to compensate yourself or keep your business running. Again, there's adverse situations for doing something like that. So you want to keep everything clean, keep everything separate from the normal operations of your business, and have your disability insurance work for you. And one of the great things about disability insurance is that if you're out of work for more than 3 months, guess what? You don't have to pay any more premiums while you're disabled. Insurance company, what we call, waives the premiums going forward. If you ever go back to work after years, sometimes, and the insurance company will say, well, okay, you're back to work. The coverage continues as though you were never disabled. So the premiums stay the same, the coverage stays the same. They keep your options open for you. They don't increase your premiums. It's a win-win-win. Okay. Any questions so far that maybe people want to ask? Okay. All right. If not, we'll just
a question come through, and it said business overhead expense. Why is it not part of a group plan? Can you expand a little more on that?
Sure. Right. The reason is that business overhead expense is considered a business policy, and in a group disability concentrates on an employee's income, not the business income or liabilities. So insurance companies do not offer, in most cases, a group business overhead expense. I've never seen it. Does that answer the question?
It seems like it does. We did not get a follow-up question, so thank you.
All right, no problem. Any other follow-up questions here on what I've said so far? Now we'll continue. Okay. So I've emphasized the need of personal disability as the first solid step to establish your personal and business financial stability. Now let's talk about long-term care. Now, I have to tell you, when I first started many years ago, there was no such thing in this country as long-term care insurance coverage. Did not exist. Did not exist until the early 1980s. And in the 1980s, I wrote probably one of the first policies ever in the Commonwealth of Massachusetts. In those days, the insurance coverage for long-term care was very, very limited. It makes today's policies look like Rolls Royces in comparison. So long-term care coverage is not just for quote unquote old people or older people. A lot of people in their 20s and 30s and 40s are starting to consider long-term care coverage because they realize taking care of their parents, aunts, uncles, grandparents, a lot of times is draining financially. And there are some situations where long-term care coverage is available as like a shared benefit between generations, parent to child, or even in some cases, grandparent to grandchild, for example. Everybody's living in the same house. So long-term care coverage, again, you have to qualify health-wise. Very, very important. They look at your family history. They don't do that in disability insurance. So that's one big difference right there. They do look at your family history to see if there's been a history in your family of dementia, Alzheimer's, Parkinson's, things like that. Okay? Or any other chronic medical issues like cancer, heart disease. Doesn't mean you can't get it. It just may be the way the rates are set by the insurance company when you apply and obtain coverage. Covers a lot of different things. It covers assisted living, covers your home care, home needs, things like someone coming in to help prepare meals or help you, with your personal care that you can't do for yourself. Covers assisted living. The insurance company will even assign a quick care, what we call a care coordinator, to make sure that you're taken care of. All right, between doctors, your hospitals, as much as your family and home care needs, and any other type of long-term care needs that you might have. It's not a substitute for group health insurance. It's not a substitute for Medicare. And from a business perspective, many, many businesses look at it as a very valuable benefit to offer their employees, as much as for the owners. So in that regard, the government, I'm not talking about Massachusetts now, I'm talking about the federal government, wants to make sure that everyone who has financial interests in their businesses, their homes, their incomes that can qualify, obtain long-term care coverage, right? So they make it tax deductible. So how do they do that? If it's a personal purchase, there's formulas to determine your tax deductibility. It's generally done by age. Income's not really relevant, but it can be a factor. From a corporate standpoint, a business can pay for long-term care coverage for the owners or the employees and receive, if they qualify, valuable tax benefits for paying the premiums. And the policies on long-term care coverage on a group plan almost always are portable, unlike group disability insurance. So it's a huge benefit for companies to consider for long-term care coverage planning for themselves and their employees. If they move to, if someone moves to another state where they establish a trust, that does not preclude the need for long-term care coverage, because the government takes a very, very dim view of people trying to shelter assets to not have the state that they live in pay for long-term care benefits. The money simply is not going to be there, and the quality of life is definitely going to be affected for each individual that depends on the Commonwealth or another state for their long-term care needs. Any questions about that? Okay, no? All right. So as you may have heard or seen, long-term, let's go back just a little bit, Danielle, if we can, on the previous slide there. Okay. So long-term care costs really add up quite a bit. I've heard stories recently where it's just incredible. Figures of $15,000 to $30,000 per month for home care, not a nursing facility. That's unbelievable that families have spent to take care of their loved ones. Just incredible. And they decided, in their own particular case, not to use state benefits because they knew they wouldn't get them, and they wanted a certain quality care for their loved ones. So in order to get government assistance, you have to spend down a lot of your money in order to get benefits for them to pay for long-term care coverage. And the amount of assets and income you can keep are tiny. So it's really not a good approach. That's why businesses want to get involved in long-term care planning as much as individuals. We can move on a little bit, I think. Any questions? Okay. So let's talk about life insurance now. So we talked about disability, talked about long-term care insurance, and these are foundations, as I mentioned. And life insurance, a lot of people think of as the first thing they should buy, not the last thing. Well, that's fine. But the reason I put it last here is because so many people will get disabled and need long-term medical care. And life insurance actually, unfortunately, is the end result of a long-term disability or unexpected long-term care insurance expenses. So life insurance, it can be used for businesses. And for businesses, you have to be very careful. It can be owned by the corporation. There are benefits to the company as much as an individual. Again, a lot of people say to me, well, I have group life insurance. What do I need individual life insurance for? And they may own the business. Well, that's great. But in a lot of cases, business group life insurance has a limit, generally 2 to 3 times income. You can buy more, of course, but 2 or 3 times income. So if someone made, let's say, $75,000 a year, you're going to get maybe $225,000 of life insurance 3 times, or 2 times would be $150,000. And that may or may not be sufficient for their families to make ends meet going forward. Generally speaking, people who are beneficiaries of life insurance get maybe 2 or 3 years of quality of their their financial security taken care of. But then what happens after 2 or 3 years? That's really the key. So life insurance from a business perspective, you have a situation where the company can pay for it. It can be tax deductible. Okay, you have to be careful with that. And the life insurance can be used constructively to help businesses survive, go forward, also help the beneficiaries of the owners of the company. And the taxes, if designed right, can be minimal or non-existent. Okay? And again, people say, well, if I set up a trust, well, does that take care of the taxation issue? Not necessarily. Again, you have to have a trust in place for generally about 5 years or more, and give up a lot of ownership rights to that money in order to that to be quote unquote out of your estate and tax free to the beneficiaries. So you have to be very, very careful. That's why I work with attorneys and accountants to make sure that everyone's on the same page. Okay? You don't want to get into a situation with the business to start borrowing money from banks and say, well, I don't really need life insurance. I can borrow money from banks and so forth, or I can borrow money from family and they're not going to expect me to repay it. And well, that's in the perfect world department, but it doesn't really exist very often. I can tell you that I've had more than my fair share of clients who have come to me directly from banks who said, we need you to write a life insurance policy on a client that's borrowing this amount of money from us. We have to guarantee it with life insurance. Guarantee it. So they're not talking about a policy that's only going to last for 5 to 10 years. They want a policy that's going to last, in many cases, 30 years or more. So a lot of people say, well, what's wrong with, let's say term insurance? There's nothing wrong with it. That's great. But a lot of times, permanent life insurance is a better solution on a more than 20-year basis. And again, it's tax deductible in many cases to the corporation. Any questions so far? No?
We have not had any come in yet.
Okay. Any comments anybody wants to bring up?
I would say comment with the long-term care coverage. That's really interesting for me to know. I know my family's starting to deal with that with my grandmother. So having that kind of education and background on how to pre-plan for, even myself has been really enlightening.
Right. It's long-term care is really misunderstood. And the only thing I'm going to say in my favor is that many insurance agents and agencies are not qualified to even discuss it. You have to be certified every 2 years to even talk about long-term care and coverage. Now, I've written long-term care coverage for 40 years or so, but I still have to get certified. So there's a lot goes on behind the scenes as far as education and as far as keeping up with the trends that do change. And I've seen it in all lines of insurance. But long-term care coverage has been the one that's changed the most in my career by far. And to protect your lifestyle, especially with your family history, like you just mentioned, Danielle, of your grandmother, that's a window into the future. And to obtain coverage at your age, for example, would be quite inexpensive. And the planning benefits to you and your family would be multiplied many, 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 many times going forward at a very low cost.
Wonderful. Thank you so much.
Yeah. And so is there any more questions about life insurance so far? No? All right. So the most complex topic, which we're not going to, fortunately for everybody here, we're not going to go into all the intricacies of buy-sell agreements. We're just going to talk about the basics. Quite misunderstood. And I will tell you one little anecdote. Many years ago, I was giving a seminar for continuing education credits to a group of insurance agents. And one of them said to me, there's no such thing as disability buy-sell agreement or disability buy-sell insurance. I said, of course there is. So I explained in great detail to the class, and some had their mouths pretty far open because they never heard of it. They only heard about life insurance to fund a buy-sell agreement, which we will talk about here. But again, you have to have good health. They look at the financials, just like disability insurance. I didn't really touch on the disability insurance on the financials, but you do have to provide financial documents to satisfy the insurance company, because the insurance company has to report the information to the IRS. That's why. It's not a question of them being nosy. It's a question of due diligence and making sure that when they do pay out the benefits, it meets tax guidelines set out by the Internal Revenue Service. So the same thing holds true with buy-sell agreements. It's not loosey-goosey, ad hoc type situation. It's designed to protect the owner or owners. If you're a sole proprietor, you have a partnership, or you have a corporation of, let's say, 5, 6, or more people. All right. So buy-sell agreements are always designed properly. It's always drafted by a qualified attorney. I always work as well at the same time with the individuals or companies' CPA. So we're all on the same page. Extremely important. I'm not the person here to design it all by myself with no help. Okay, that's why I'm called the quarterback. That's why we're calling here quarterback, but we're not doing Monday morning quarterbacking here. We're doing a advanced planning. So it's designed to give you on a buy-sell plan really quality planning going forward that may not trigger for 20 or 30 years down the road. But if you don't do it now, it's chaos when it comes time to try to sell your business, whether it be under favorable conditions or unfavorable conditions. So And buy-sell agreements should always be funded, again, with good health, financials that are documented, structured properly, that everyone can agree upon. The government, because the government will get involved down the road, no question about it. They don't get involved right away. They get involved at the time the buy-sell is actually executed. Executed means either by death, by disability, or by retirement. One of the three. All right. So to have a well-funded strategy is super important. So it covers all facets of ownership. So proprietor, as I mentioned, partnerships, corporations, whether it be a C corporation, S corporation, an LLC, subchapter S, makes no difference. All right. So the government doesn't really care what type of corporation is set up. And a lot of people say to me, Mike, the reason I'm going to set up a corporation is because I'm going to avoid tax liability. That is unfortunately not the case. The real reason people should set up a corporation or have a partnership is to make sure that there's a orderly succession, regardless of a favorable, unfavorable situation, to that business and to their individuals. Okay, so we look at your cash flow, your health, your personal needs, your family needs, your business needs. Okay, so that covers the whole situation there. So there's two types of buy-sell agreements. One's a cross-purchase, which is ideal for companies that have generally two, maybe three, but generally two owners, maybe three or less. And entity purchase, which is the corporation owns the insurance. All right. But each person has a policy. Right. So, and the insurance company can arrange, again, based on the buy-sell agreement, for a lump sum benefit to be paid out to the disabled individual, if there's disability buy-sell involved, or installment payments, even life insurance. The same thing would hold true. They can arrange based on the cash flow necessary for the survivors of the business, as much as for the current owners and the families, for either lump sum or installment payments in case of death and disability. So the main question is, what happens if one of the key owners becomes disabled or dies? How's the business going to function? How's the business going to survive? In most cases, it doesn't. That's why the disability or life insurance, or both, buy-sell agreement becomes super important. Again, attorneys, accountants work with me to make sure that their clients are taken care of. I'm just the guy that makes sure that the insurance gets installed properly. The insurance company knows exactly what's going to happen when a death or disability is triggered at that point. Okay. Any questions about that? No?
Yes, we actually had one question. It
Okay.
asked if you could elaborate more on why it's best for under 3 owners to utilize a cross purchase.
Okay. Right. The simple reason is because in a cross purchase, if let's say you had a small company, you have, let's say, one person who's, let's say, 50, 55 years old, this is as an example, and a key person or another owner, maybe let's say in their late 20s, early 30s. Let's say a 20 to 30 year gap. Well, the insurance benefits are not going to look the same for each person. Okay? That's for the Oberns. So with the cross purchase, what happens is, let's say, and I've actually had a situation like this many years ago where I had a father and 2 sons, and the father, of course, is, at that point 30 years older than the 2 sons, and I designed under cross purchase with the input of the attorney, of course, and their accountant, a cross purchase plan where the father only owned life insurance. The 2 sons had the life insurance as much as the disability insurance, and it was very cost effective. And You really can't do that for an entity purchase because the entity, okay, would have to buy the same insurance for all three people. In a cross purchase, it's generally where you have similar ownership percentages between the parties, between the two or three owners. And that's why a cross purchase in that particular case would probably work better. All right. And in my case, many years ago, that particular example, it worked better for the owner and his two sons. They were key people in the business, but they were going to own the business. And ironically, about 5 years after I wrote the insurance, the father did pass away. Right. So the company was left whole at that point to the two sons. Okay?
Thank you for elaborating.
Yeah, I'm very happy. Any other questions about that? That's a great question. Okay. So and that, yeah. So carefully design, like this slide showing here. Okay, it's ensuring you that your family is going to have their fair share of the business. Now, another reason, which I hate to bring up, but it's unfortunately fact, that a surviving owner does not want the other party's family to help to tell them how to run the business. Just because they receive income does not make them a co-owner by osmosis, so to speak. So that's why a buy-sell is so important, because to make sure that the family of the disabled or deceased owner is taken care of, and these surviving owners can continue running the business as though it never stopped. It was never interrupted, even though there is a major adjustment period. So that's very, very important. So here's an example of a cross purchase. All right. So, and I'm going to take this a little bit slowly because it can be a little bit complex. So Sarah owns 60% of a business, while Catherine and Brooklyn own 20%. So the assessment made of the value of the business is $750,000. Okay. So to protect the business, Sarah is going to purchase $150,000 for Catherine and Brooklyn each, while Brooklyn and Catherine each purchased $225,000 for Sarah. This results in a total benefit, okay, of $750,000, which is the assessed value of the business. Now, if, let's say, Sarah being older, we'll use that as an example here, even though it's not stated. Sarah passes away first, or gets disabled first, assuming there's disability insurance involved. Okay. She's going to be made whole by that benefit of $225,000 each. That's $450,000. Right? It could be a lump sum. It could be a monthly benefit as well as a lump sum. It depends on how the policies are structured. And that's done, again, ahead of time with the help of the buy-sell agreement on that cross purchase that has been set up hopefully years before. Okay? Now, in this particular case, Catherine Brooklyn eventually will be able to obtain the same value without paying taxes, again, properly structured. So they're going to buy out not just Sarah's interest, but also restructure their buy-sell agreement for themselves on cross purchase for the then value of the business, and presuming it's going to go up over time, hopefully. Not necessarily, but hopefully that's the case. Okay, so the cross purchase, which is a formal agreement, and people saying, well, what if one of the owners decides to break it? They can't. That's why a legal agreement is so important. It's documented and serialized with policy numbers, if the insurance is involved, to fund the buy-sell agreement. So some people say to me, well, can you have a cross purchase or an entity purchase without funding with insurance? Sure you can. All right. But Why would you? Because then you're taking company assets to pay off the other partners at a very, very high cost under most unfavorable financial situations. So again, to establish a cross purchase going forward is super important. Any questions about this example?
We have not received any questions in the inbox.
Okay. Is it pretty clear so far?
I would say
Everyone-
it's very clear, and it looks like we're getting some thumbs up through the chat that they're understanding.
Okay, terrific. Okay, now entity purchase. Now you can do a cross purchase for more than 3 owners, but it gets very, very unwieldy. In this particular case, we're going to show hopefully why. So we have a nice little company called Rosebud and Tree. Okay, a little nod to an old movie I enjoy. Rosebud, that's Citizen Kane. Yeah. LLC has 5 owners with equal shares in ownership. The valuation of this LLC is $2 million currently. So everyone's going to have $400,000 of insurance. Right? How they obtain it, again, the company's going to pay for it. Each person would need the same coverage. In most cases, there are variations to this. I don't want to say there aren't. But again, you have to be super careful, and the attorney and the accountant keep emphasizing this. They're gonna mention to me what they're going to need to do for their clients and how they want to accomplish this. So I always work well with the attorneys and accountants. I don't step on their toes. So the entity purchase is going to purchase $400,000 of coverage for each owner. The company's going to pay for it. Is no, either case, by the way, cross purchase or entity purchase, the premiums are not tax deductible. Very, very important. Why? Because the benefits are received tax free. Very, very important to know that. And in this particular case, if one of them becomes disabled or passes away, each person is going to receive their fair share. The business is going to be made left whole. And the business is going to continue. Now, the entity is going to be restructured on the current value at that point for the value for the insurance necessary. And generally, it's going to go up. So it has to be a very careful structure as to how additional insurance is obtained, not to trigger any potential tax with the federal government. And that's why I mentioned much earlier, the taxes are super important. The IRS is always lurking, always. But again, if everyone's on the same page, no one understands what they're doing, and the owners, the attorney, and the accountant, and myself are all on the same page, these problems go away. Okay. The only problem is, well, you have a death of a key owner or employee. That's the real challenge. The financial part, is important, but it doesn't seem to be as important as the value of that key owner or employee that passed away or got totally disabled, and how's the business going to survive? That's really the key cost of a company. And the taxes, no one needs problems with the IRS going forward. No one. Okay.
One question, sorry to interrupt you.
No,
One
no,
question was, so why are the benefits received tax-free for an entity purchase?
Well, for entity or cross purchase, the premiums are not tax deductible. So anytime you don't write off the premiums on a disability or life insurance plan to fund a cross purchase, the benefits are always tax-free.
Great. Thank you so much.
Yeah, very easy. No problem. Okay, I think we can go to the next slide, I think. Okay, so to wrap up the this webinar, I just wanted to mention that everything everything you consider or consider to do going forward, whether it be disability insurance to cover your personal income, your business overhead expenses, long-term care expenses, and life insurance all work together. They don't work, one is better than the other. I do want to mention, some people have asked me about hybrid life insurance policies to fund long-term care benefits. I'm not a fan of it. Standalone plans are always best because the way the tax structure from the federal government works and the benefits you actually would receive in a hybrid policy to pay long-term care benefits. So the government is always involved, and I'm always mindful of a client's needs when I design a life insurance, long-term care, or disability insurance plan. Very, very important. Okay, it's going to help you guarantee your future security and guarantee your business and personal assets. Super important. Okay. So the sooner you can establish a plan, the better off you are. I can tell you that people in their 20s and 30s, if you knew what the cost would be for your own personal situation, you wouldn't think twice about it, because it's literally money in the bank. And a lot of people say, well, I can invest my money better in the stock market or IRAs or 401ks. Hey, this is great. That's great. But you can't do that without a solid, you can do it, but it'd be much more difficult to do without a quality disability plan, life insurance plan. And I can tell you one little story. It is a little story, but many years ago, a client called me up and said, I'm going to cancel my disability and life insurance. I said, why? I said, well, we were hit by a car outside our job. I said, well, when did that happen? They said, I don't know, about 6-7 months ago. I said, what? I said, and you haven't called me? So I said to them right away, I said, we're going to file a claim. They said, when are we going to file a claim? Do you realize that the insurance company would pay all those premiums for the last 6-7 months? Really? Really? All right. So we filed a claim. They got all the premiums paid back to the first day that they were hit by the car. It was the first day they got medical treatment. Right. They got their income from the policies, and they continued life insurance without paying the premiums. So they were very happy and very thankful. So that's why you establish things way in advance when you say, well, I'm young, healthy, I'm not going to need this or use it for a long time. And hopefully that's true. Hopefully you never need to use it, but it's there for you, and your banks, your family will all be very satisfied and very happy with you. Any questions?
We had one mostly comment, but question. It said, you mentioned being certified every 2 years to talk about long-term care plans. What are other certifications that we should look for?
As far as long-term care?
Just in general, when dealing with insurance, what is there for certification?
So, well, obviously you want to make sure that the person you're talking to, number one, is, believe it or not, licensed. There's some people I've talked to that I just say, are you licensed to even talk about this? Well, I work for such and such. I said, well, are you licensed? And they say, well, I don't have to be because I work for such and such. No, you have to be licensed. If you even talk about it, just talking about it, you have to be licensed. So you want to make sure that their credentials check out. I have to be certified, as I mentioned, with long-term care. I'm personally grandfathered for continuing education, but I provide continuing education for insurance agents and other financial professionals to make sure that they are current on their trends, tax-wise, legally, and so forth, for insurance planning. So never hurts. I never get offended. Someone says to me, we want to check you out. Be my guest.
And they can check you out on BBB, so you've got all your boxes checked.
And yeah, and check me out with the Division of Insurance, Commonwealth of Massachusetts. I've been doing this since 1975, as you mentioned.
That's wonderful. Well, thank you so much, Michael, for your time and your expertise. I know I had a full education today, and I had a wonderful time. And I want to thank our audience for all their questions throughout. If anybody has any, please feel free to pop them in the chat box or unmute and ask them now. I'll just say as a reminder, BBB has new events that pop up quite frequently, and you can always find them on our events page to learn more about them and register for our latest events, right where you found this event. This webinar was recorded, so we will have it up on BBB's Vimeo and YouTube, found right on bbb.org. And again, thank you so much for everyone joining us today, and Michael, for your time. I don't see any questions coming through. I think you did a wonderful job making such a broad topic digestible for everyone today.
Wow, that's important. Thank you, Danielle.
Thank you. All right, everyone. With that, I'll give you a few minutes back to your day and enjoy.
Yes, thank you. That was great.
Thank you, everyone.
Have a good day.